Good morning. Dollar yen. I think it's worth noticing that the Bank of Japan, for the first time in the last 30 years, now are actively pursuing an inflationary policy. They want to reflate the Japanese economy. So far, Bank of Japan has been very cautious with anything to do with buying bonds and lowering interest rate and in itself printing money. So now they move to a full force printing of money. The goal being that they want to have a 1% inflation rate. One of the reasons why we've been very bullish on the yen over the last Euro investor talks has been that deflation actually increases the currency strength due to the fact that your purchasing power goes up. Now, if the Bank of Japan is able to maintain and implement this 1% inflation target, we have two things happening which is of interest. First of all, it should make the Nikkei the best performing stock market in the world, as you have the balance sheet of the corporation moving from a deflationary environment, which is taxing, because every year the payment of the interest rate gets higher and higher, and what you can buy for it is less. And then to an inflationary one where you have inflation paying for some of the burdens of debt. That will mean that the equity market should be performed relatively well. The price earnings should in itself go up with several numbers as we move from deflation to inflation. Secondly, in terms of the currency aspect, clearly it needs to be matched by a weaker currency. So basically, as growth gets more balanced, as there is less deflation, we see the currency will weaken. So what we are seeing these days, and since the 18th of February announcement by the Bank of Japan, is a relatively, for the volatility we have in the marketplace right now, a big move to the upside. We think this week could be a pause in this strength in dollar yen, but we think you should use that during the week to buy some dollar yen long term. We could potentially be moving from the low 70s now in the low 80s into the high 80s and into the 90s over the next 3 to 6 months. We will probably this week put out a recommendation to be long both the Nikkei and the dollar yen long term, if possible, in an unleveraged way. So we are becoming very bullish on dollar yen, although for this week we expect it to have some sort of a setback, but use a setback to initiate a long dollar yen trade, unless of course the equity market goes totally belly up, which looks very unlikely with the momentum going on right now. So for the first time in 30 years, focus is back in Japan. Can they or can they not perform? We think they will ultimately. There will be a lot of false starts, but keep a focus on Japan. It's again becoming a major dominant force in terms of new growth to the world economy. Thank you.